Imagine this, the US Mint quietly doubled the price of silver, and it's not just a minor adjustment, it's a warning. While the world has been glued to the fluctuating silver price at $90, something far more significant has been happening behind the scenes. Over the past few days, the market's been in turmoil, silver bouncing up and down, leaving investors wondering if the bull run is finally over. But while everyone was fixated on the charts, the US Mint made a move that's shaking the very foundation of the market. They raised the price of the proof American Silver Eagle to $173 and the uncirculated version to $169. And here's the kicker, the current spot price, $90. Let that sink in for a moment. That's nearly double-legged. Why would the government, of all things, set silver's price nearly twice what the market says it's worth? Why would they risk throwing the market into chaos? The Mint just made a dangerous admission. They know silver is worth far more than the $90 price tag the markets are showing, and they're telling us they can't afford to sell it at $90 anymore. Why does this matter? Because they know the silver market is broken. The disconnect between paper silver on Wall Street and real physical silver has never been this extreme, and that's just the beginning. So what does this mean? The Mint just dropped a bombshell by almost doubling the price of silver, and yet the official price is still sitting at $90 on your screen. It seems like a simple pricing update, right? Wrong. This isn't just a price change. It's a red flag. The US Mint, the institution responsible for the currency itself, is acknowledging that the currency is broken. And they've quietly signaled that the real price of silver is far higher than what the paper market suggests. But here's where it gets really interesting. The Mint isn't selling coins right now. They've suspended sales due to a pricing backlog. Why? Why would they bother adjusting their prices now if the market is frozen? If they can't even sell coins, why would they go to the trouble of updating their system? Here's the truth. They're preparing for the next phase. The moment they open their sales window again, whenever that is, they can't afford to sell at $90. If they did, it would be a complete disaster. They'd be giving away a strategic asset at a massive loss. They know the paper price is a fiction. It's a digital illusion. The real value of silver, the physical metal, is much higher. Now let's talk about the two-tiered reality unfolding right before our eyes. In one world, you've got the paper traders on Wall Street swapping digital contracts back and forth, pretending silver is worth $90. It's all speculation. But in the other world, there are the physical owners, the mint, the dealers, the industrial buyers, who know that if you want the real metal, you're going to have to pay way more. And here's the kicker. The wider that gap between the paper price and the physical price gets, the closer we get to the breaking point. When the gap hits $80, it's no longer about price discovery. It's about insolvency. So let me ask you this. If you're holding silver right now and you see the Mint price it at $173, are you going to sell your stack for $90? No, you're going to hold. You're going to wait because you know your silver is worth more than the $90 the banks are trying to get you to accept. This is the moment when everything starts to shift. But let's take a step back and really think about this. What's actually happening here? The US Mint has just made it crystal clear. The $90 silver price is a fantasy. And that's not just a gut feeling or a guess. This is backed by a cold, hard fact. The Mint has priced silver at $173, nearly double the market price. That isn't a mistake. They're telling us something loud and clear. Let's break it down. You see, silver isn't just some commodity, it's a strategic asset, and the Mint knows it. If they were to continue selling silver at $90, they'd be losing big. This isn't just about losing money on a transaction. It's about handing over a valuable resource at a fraction of its real worth. The Mint had to act before that moment came, and that's why they've priced it at $173, because they know the actual value is far higher than the paper price. But here's where things get interesting. The Mint doesn't need to sell coins right now. They've suspended sales, but they still made the price update. Why? Because when they finally open their sales window again, they can't afford to sell at $90. If they do, they'll lose control. It's a game of survival, and the Mint is taking the first step to protect themselves from a market collapse. The key point here is the disconnect between what's happening in the paper market and what's really going on with physical silver. You've got one reality where digital contracts are swapped on Wall Street, and another where the physical silver is disappearing fast. And in the world of real physical silver, the price is much higher than anyone wants to admit. Here's a key moment. If you own physical silver right now, you're sitting on something far more valuable than the $90 on the screen. The Mint's pricing is showing us that, and it's showing us the true cost of silver. When the disconnect between the paper price and the physical price gets this large, something has to give. And that's the most important thing to remember. The market's already broken. The only question left is, how long will it take before the paper market crashes and the physical price takes over? The signs are already there. Now, let's talk about how this all escalates, because this isn't just about some pricing update. This is a signal that things are getting much more intense and much more dangerous for the entire financial system. Let's rewind a bit. On the same day, the Mint quietly updated its price to 173 hours. Something else happened. The price of silver took a dive. It dropped as low as 86, one of the sharpest price crashes we've seen in recent memory. The question is, why? It wasn't just a market correction. This wasn't a natural dip. No, this was a deliberate move. Banks and traders tried to force the price down, to smash silver and reset it at a lower price. But why? Why would they do that, knowing how volatile things are? Here's what they were trying to cover up: a massive withdrawal of physical silver. We saw one of the biggest single-day withdrawals in the history of the COMEX. Over 4 million ounces of silver disappeared from the vaults. Let that sink in. 4 million ounces. That's over 130 metric tons of silver in one day. This wasn't a few coins taken by a retail investor. This was a systemic raid. Now, here's where it gets chilling. This massive withdrawal happened on the same day silver prices were pushed down to $86. You don't think that's a coincidence, do you? The price was deliberately crushed so these insiders could pull silver out of the vaults at a discount. Why would they do this? Simple. They needed to settle those withdrawal requests for physical silver, and the lower the price, the cheaper it was for them to take it. A $6 drop in price meant $24 million in savings on those 4 million ounces. Now think about it. The Mint just told us that silver is worth 173, but the price the banks are offering is $86. If you own physical silver, which price do you believe? Because it's clear which price is real, and it's not $86. But here's where it gets even worse. What happened next is proof that the system is on the brink of collapse. And it's not just about a few million ounces of silver vanishing from the vaults. What we're seeing is the full-scale unraveling of a market built on sand. Let's dive deeper. The withdrawal of over 4 million ounces wasn't just a blip. It's a signal, a message. The physical silver is disappearing fast. And here's the real kicker. The banks aren't just letting this happen. They're trying to control the narrative, trying to keep the price down to protect their positions. But the data doesn't lie. While the banks were frantically trying to suppress the price, the Mint was making a much clearer statement. By pricing silver at $173, they essentially forced the market to acknowledge a painful truth. The paper price of $90 is an illusion. The physical reality is that silver is worth far more than that, and the Mint's actions were an undeniable signal that they know it. And this is where the contradiction between words and actions becomes too big to ignore. The Mint says silver's worth 173, but the paper price on Wall Street says it's $90. But here's the catch. You can't buy silver at $90 if you want to take possession of the metal. The price is just an illusion. So, what does this all mean? It means the banks are trapped. The real silver is being pulled out of the vaults, and there's no way to get it back into the system at this price. The only way this ends is with a massive repricing of silver. And when that happens, it won't be a slow climb, it'll be a shock to the system. The truth is this: the banks can't cover their short positions. They're sitting on massive bets that silver will stay low, but the reality is they're about to be exposed. So, what does all of this mean for you, the person watching this video, and the individual who's holding silver or watching the market from the sidelines? Let's take a step back and consider what's happening in the real world outside of all the charts and insider moves. This is no longer just a game for big players and hedge funds. The actions taken by the Mint and the banks are directly affecting you and your financial future. Think about it. The U.S. Mint is now signaling that silver is worth 173s, and yet the price on the screen is stuck at $90. If you're a retail investor, what do? Do you sell at $90 even though the Mint says silver is worth nearly double that? Or do you hold on, knowing that the true value is much higher? This is a classic case of the system trying to force you into selling an asset that is far more valuable than the price you're being offered. The Mint's actions make it clear. If you're holding silver, you're sitting on something valuable, and the price is about to reflect that. But the banks don't want you to know that. They need you to sell so they can cover their massive short positions. But here's the kicker. You're not alone in this. The retail public, the average investor, has been waking up to this reality. They've been buying silver for months, not selling. We're seeing a shift in sentiment. The days of silver being a quiet market for contrarians and preppers are gone. Now, more and more people are realizing what's at stake, and they're voting with their wallets. If you've been feeling that shift, if you've been seeing more and more people talk about silver, you're not imagining it. This is a massive movement. People are starting to understand that silver isn't just a precious metal, it's a shield against the collapse of fiat currency, and they're acting on it. So what's the takeaway here? If this situation feels familiar, if it feels like the system is trying to trick you, you're right. The game is rigged. The Mint has just told you that silver is worth $173, and the banks have made their move to take what they can before the inevitable surge. But the real question is, how long will you wait to act? Now, let's take a step back and look at the bigger picture. This isn't just about a few banks fighting over silver. This is about the system that's allowed all of this to happen, and how it's built to hide the truth from you. The question you should be asking is, how did we get here? How did the price of silver become so disconnected from reality? Why is the Mint pricing silver at $173 while the paper market says it's only worth $90? And why are the banks scrambling to drain the vaults before the price skyrockets? Here's where it gets unsettling. It's all about incentives. The entire system is designed to suppress the price of real, tangible assets like silver. The banks, the governments, the major financial players, they all benefit from keeping the price low. Why? Because a low silver price means the status quo remains intact. It means the dollar can keep its value on paper, and the banks can keep profiting from their massive short positions. But here's the thing. The system has been manipulating the price of silver for decades. They've kept it artificially low, pretending that the market is stable, when in reality, they've been playing a dangerous game. And now, with the physical supply drying up, the cracks are beginning to show. The Mint's decision to price silver at 173s is the system's way of admitting that the paper market is a fiction. The real price of silver, the price that the Mint is acknowledging, is far higher than anyone wants to admit. But the system isn't just going to roll over and let this happen. The forces at play here, the banks, the government, and the market makers, will do whatever it takes to maintain control. And that's the scary part. This isn't just about silver. This is about the entire financial system and the way it's rigged to benefit the few at the expense of the many. It's about a game that's been played for decades, and now the system is starting to crumble. And when it does, it's going to affect every single one of us. So let's talk about what's coming next, because as much as the market is in turmoil right now, the real danger lies in the unknowns, the choices that are still on the table. First, consider this. If the current trend continues, we're heading straight for a crisis. The paper market, the system propped up by digital contracts and promises, is collapsing. The physical silver is being drained at a terrifying pace, and the Mint is now pricing silver at $173. A far cry from the $90 it's being traded for in the paper market. We're witnessing the early stages of a great repricing, a massive shift that will change everything. But here's the catch. The system isn't going to let this happen without a fight. The banks are trapped, but they're not going down without a battle. As the physical silver evaporates, they'll try to push the price down again. They'll use every trick in the book to suppress the price and keep the system from imploding. And if they manage to do that, even for a short time, it could delay the inevitable collapse. So what's the alternative? What happens if the paper market can't hold on, if the vaults keep draining and the price of silver climbs to meet the physical reality? The short answer is chaos. You're looking at a massive shock to the global financial system. The price of silver won't just rise slowly, it'll explode. And when it does, everything will change. The banks will be forced to cover their positions at a loss, and the financial system will have to adjust to a new reality, one where silver is far more valuable than anyone expected. But here's the thing. We're not just watching this happen from the sidelines. The choices we make now will shape the outcome. If you're still holding on to paper contracts, or worse, relying on ETFs like SLV, you might want to reconsider. The system is on the brink of implosion, and when it falls apart, only those who own physical silver will have anything to show for it. So here we are, the markets are in chaos and the clock is ticking. What's the final verdict? It's simple. The great repricing has already begun. The U.S. Mint just tipped its hand, revealing the real price of silver. They've said it's worth 173s, but the paper market still insists it's only worth $90. That's a massive disconnect, and it's one that cannot last much longer. The vaults are emptying out. The banks are trapped in a short position so large it could wipe them out. The retail public is waking up and voting with their wallets. The price of silver is about to explode. The question is not if this happens, but when. And when it does, the shift will be monumental. The banks can only suppress the price for so long before they lose control. And when the paper price finally matches the physical price, you'll be looking at the most lucrative opportunity of a lifetime, but only if you're holding the real thing, silver in your hand, not in some ETF or paper contract. So what should you do right now? Hold tight. Don't let the volatility scare you. The system is on the brink of collapse, and when it falls apart, it's going to be messy. But for those who understand what's happening, it's also going to be the greatest wealth transfer in history. The final takeaway? Don't sell your silver. Hold on to it. The Mint just told you what silver is worth. Don't get caught in the paper game. The great repricing is coming. And when it does, it won't just be about price, it'll be about survival. If you've made it this far, you understand what's at stake. Follow for more in-depth analysis because the story isn't over yet, and the next chapter could change everything.